Let's bring in Alan Nuckman, Chief Market Strategist at Agora Financial, who's live from the CME in Chicago. Alan, great to have you with us. And we mentioned the big drop once again that we saw last week for the VIX. And I suppose it is easing concerns around geopolitical tensions, inflation, central bank concerns. They all seem to have faded of late. And as a result, the VIX index seems to have really pulled back a lot, certainly since everything flared up there around February. It seems to be a sign that investors are very calm right now.
Yeah, I was just going through your list, and there's many, many more. You can make a long, long list of things that could spook the market, but optimism wins. That's what we're seeing here. We've seen this time and time again when you get a bounce in the VIX, or as I like to say, a VIX-plosion. Now, let's remember, we're 75% off of that February high. We're resuming the path of least resistance, which is VIX down and market up. So you're seeing the stock market now, all the three major markets right now are positive for green for 2018. So you're seeing the markets rebound. Now, let me ask you a question. I've been talking about crude as a catalyst, and I think this is one of the things that has supported the markets here recently. A lot of beaten down energy stocks. How many weeks, how many months, and I think we're going on a year that you and I have been talking about how crude was a great reward to risk play, and that's come to fruition.
Yeah, absolutely. All credit to you, Alan, because that certainly seems to have paid off for a number of investors. Do you think there's more to run, perhaps, for crude prices?
I definitely don't want to argue with the trend. It's just like the strong stock trend that we've seen. Yes, we had a pullback, we had some profit taking, but crude oil has done very much the same. If you look at the action last week when we had the Iran announcement, the market sold off, but it bounced back $4 very, very quickly. So that shows the internal strength that people use that as a buying opportunity. And I think we've been talking about this for a long time. It's a global growth story. And the supply situation is what it is, but it's being sopped up by expansion around the world as economies around the world continue to grow at a very, very fast pace. That's spiking the demand right now. And I think that had been overlooked for the longest time. We had talked months ago about 75 was the breakout target as the midpoint of the halfway mark of the drop from 114 down to that 26 low. So I think we're closing in on that. Then where we go from there, I'm not so sure, but I still believe that crude right now still has some more upside potential because of the momentum and because of the overall trend.
What about for tech stocks? Do you think there's more momentum there? We were talking about, obviously, the NASDAQ doing well again today, Apple making its way closer to that $1 trillion market capitalization mark. Do you think there's more momentum behind some of those tech plays?
Yeah, I'm not going to be the guy that's going to try and short these stocks, but let's remember they've already bounced 10% in nearly a month, and we're just a couple of percent away from those all-time highs in that tech sector. So this may not be the best area to be levels to be going after these individual stocks that have already made a big run. Obviously, Apple's had a huge move. Facebook is almost fully bounced back. So I'm not so sure about that. I still think there's value in some other sectors that have kind of been left alone. Now, we talked about crude oil, and I think one of the catalysts for crude oil is crude oil continues to go up, but the dollar had strengthened. Now, we talked that may be a fake out breakout, and last week the dollar made new highs but closed essentially unchanged. So let's see if that's the end of this dollar bounce, some short covering that we saw. If that is the case, then oil will continue higher, and the other market that's going to benefit from that is the metal market. Now, silver has been silent, and gold has been stuck in a range. I like GDX, which is the ETF that tracks the gold miners here in America. You look at that, it's been trading between 20 and 25 for 1.5 years. Right now, we just got bounced above the halfway point. So gold has been, very much off the radar here recently. So I'm looking at the miners as a long-term play. The January 20 calls, we're about 23 right now, so it's $3 in the money. That option's trading for about $4. And we haven't been down to that 20 level since December of 2016. So again, it's about reward to risk. I think this is a stock that has limited a sector that has limited downside, just like crude did in last year at this time. I think that's where we are with the metal market that could have a healthy rebound once we get some more interest in it.
We talked there about, obviously, these sectors that are doing well and the fact that the indexes, the VIX index has really tumbled. Do you see anything in the week ahead that might upset this picture?
Well, we're at the end of earnings season, so that's sometimes the markets get disappointed and they start worrying about the next numbers. But in this particular instance, I think we've had a delayed reaction to earnings. So 90% of the S&Ps reported so far, and 78% beat on EPS, 77% beat on on revenue. So we've had an excellent earnings season, but we didn't get the initial reaction like we typically do at the beginning of the season a couple weeks ago. I think it took some time for people to digest it, just because there's so much noise and nonsense happening in policy and politics that I think people took their eye off the ball and they weren't focused on earnings. And if you look at the earnings growth this quarter, it's been great, and it's expected to be great again next quarter. So I'm not looking for the usual window of concern that happens after the earnings season when people are worried about the next season, because I think we're having a delayed reaction, and I think we're going to see strength all the way until the next season. And like I said, we're not that far off of the all-time forever highs in tech, and that's been a market leader. If you look at the S&P, this push above 2,700, that's very, very powerful. We've been trading between 2,600 and 2,800 since November. So we could make another move to that 2,800, and then we're sitting on top of the all-time forever highs once again, believe it or not.
All right, fantastic. Well, on that positive note, I think we'll wrap it up there. As always, Alan, appreciate your optimism and your great attitude. Thank you so much for joining us.